Welcome to this introduction on the European Central Bank, the ECB. Now, I'm going to tell you a few sort of tips with the ECB. There's a few sort of nuances with the ECB that you'll only learn through experience, but you'll be able to benefit from that with this video. Now, the European Central Bank is the central bank of the 20 European Union countries which use the euro. There's 27 countries in total, but only 20 of those use the euro. The main task of the ECB is to ensure that they maintain price stability in the euro area, and so they preserve the purchasing power of the single currency. Now, the European Central Bank was established on June the 1st, 1998, and it is one of the world's largest central banks. The group which decides monetary policy within the ECB is called the Governing Council. The council is made up of 6 members from the executive board of the ECB, and the individual governors for each of the separate European members' countries' banks, as well as a president who provides the figurehead for the ECB. The current president is Christine Lagarde. That will likely change by the time you watch this video. Now, the ECB likes to provide forward guidance to the markets in order to avoid price shocks to the euro area's currency. They obviously want to keep prices stable and maintain long-term growth. It's good for the whole eurozone if people know what the exchange rate is going to be. The ECB wants to maintain annual CPI, that's inflation, just below 2%. As an export-dependent economy, the ECB wants to put a limit on the strength of their currency, as this can hurt their export market if the currency becomes too strong. The monetary policy decision is explained in detail at a press conference. It's held every 6 weeks, and the president, assisted by the vice president, chairs the press conference, which happens after the actual decision. So just be aware that there's some nuances to the ECB. We'll go over to the website and I'll explain these nuances. And you have to be aware of this with all central banks, particularly with the ECB. Let me just flip back. Particularly the ECB, you get the rate decision, right? 12:30, 12:45 UK time. Then you get the press conference like half an hour, 40 minutes later. And then you get what's called these sources reports. And these sources reports are kind of unofficial, official communications from the ECB to the market. So you have the interest rate decision with a rate statement. Then you have a press conference. And then you have a sources report. So what that means for currency traders is don't make the mistake of thinking there's the rate statement, I'll make my trading decision on the rate statement. No. Because the press conference might emphasize something different in the statement, may even contradict the statement to a certain degree. And then the ECB looks how the market reacts, and then these sources reports can come out at like 3, 4 o'clock of the same day, and then some sources report of the next day. So in effect, I think the ECB are very, very clever, because instead of just having like 1 or 2 opportunities to speak to the market, they've probably got 4 or 5, and they sort of spread out their communication, different methods over 48 hours in some cases. So just to be aware of that dynamic. Now, sometimes if there's such a huge shift in a statement, then fine, the move's going to be on, but just be aware of that. It can provide two-way trading opportunities, or more likely, it means people get chopped around and they're messed around by the ECB. So just to be aware of that. From their perspective, it's clever because if the market reacts too extreme in one way, they can pull it back with a comment. Do you see? So and the ECB are the best example of this. They use the press conference, they use sources reports. They use all these different ways to communicate, and you have to be aware of it. It's a nuance that you only really pick up and understand when you've been trading it for years. Okay, without further ado, let me show you where to find the information. So the ECB website, here it is. And what you're looking for, again, the links will be here in the PDF, but I'll show you how to find it, and I'll give you the links for the monetary policy as well. Like everything, you want to go to the monetary policy and markets, and now you're looking for the monetary policy decisions. The decisions, statements, and accounts, click on there. And then you're looking for the monetary policy decisions, right? And that tells you. And then what you want, the monetary policy statements and transcripts of Q&A. Now, the Q&A That press conference comes after the statement. So what you can see, this is the statement here, right? And once again, as I've told you, they tell you what they're looking at. Look, our interest rate decision will be based on the assessment of the inflation outlook in light of the incoming economic and financial data, right? The dynamics of underlying inflation and the strength of monetary policy transmission. So quite a complicated statement. It's not always as complicated as this. This is because at the time of making this video, we got Trump's tariffs going all over the place, and that's messing with central banks' forward guidance because they don't know exactly what's, they don't know what's coming next. But again, you see the principle. That's the statement here, the first bit. And then once you've gone through the statement, you see it's short, you then go into, right, the Q&A. The first question, right, that's the questions, right? Questions. So as you can imagine, these questions come right after the rate statement. So the rate statement is usually, I think, 12:30 UK. Press conferences like 45 minutes later, 1:15. They can often be a bit late when they start. Same with the Federal Reserve. You have the statement, then you have the press conference, and then you have these sources reports. So there's a number of different ways that the market can communicate. But that's what you want to do. That's how you find it. And again, you can see what the ECB are focused on. Now, if you're struggling with that, you can just look at the monetary policy statement. You can just look at the monetary policy decisions there, right? And just see, you see that's a bit shorter. And then you can go back to the other one to see clearly where the Q&A is. I'll put the links in the PDF so you'll be able to find that. And that is your introduction to the European Central Bank. Now, the blueprint for modern central banks emerged from the founding of the Bank of England, the BOE. It was created way back in 1694 in order to help fund a war against France, and it raised over £1 million in its first days of service. The King and Queen of the time, William and Mary, were two of the original stockholders, and for many years the bank was privately owned. The original Royal Charter of 1694 declared that the bank was founded to promote the public good and benefit of our people. It was in 1734 that the Bank of England moved to its iconic location in Threadneedle Street, where it still stands today. In fact, one of my members of my family sent me a picture of the Bank of England today because they are working in Lloyd's today, and they sent me a picture of the Bank of England. So the success of the Bank of England has meant that many countries around the world have copied the blueprint that the Bank of England laid down. And today it's run by the Monetary Policy Committee, referred to as the MPC. And this is a 9-member group made up of a governor, 2 deputy governors, 2 executive directors, and 4 external experts. They want to maintain monetary and financial stability to maintain confidence in the British pound. And they meet monthly to discuss and adjust monthly policy. Let me take you over to it. Now, here's the Bank of England website. I find the Bank of England website quite difficult to navigate. So I will pop in the PDF the link to the monetary policy decision, but it's less sort of easy to navigate than some of the other central banks. But nevertheless, you just press on monetary policy and then you have the key interest rates. And at the bottom, you've got the latest decisions, right? So you can just pop there and you can see the latest decisions. And again, don't forget what's going on here. You see the decisions and they tell you important information. So it tells you a vote split. I'll come on to that vote split in a minute. Talks about substantial disinflation over the past 2 years. Previous external shocks have receded. Some degree of policy strain, maintaining bank rate and restrictive. Let's have a look. Measures of pay growth. Let's just see what's the big thing. Right. Right, okay. So there remains 2-sided risks to inflation. So that tells you once again that unexpected inflation prints are likely to move the Bank of England's policy decision. 12-month CPI increased to 3.4% in May from 2.6%, in line with expectations. So they were expecting higher inflation, and they're saying there's 2-sided risks. So that means if inflation suddenly, falls back from this 3.4% high, then it means that the Bank of England have more permission to cut interest rates and the pound will fall. But once again, you can see that they're telling you that waiting for inflation to return sustainably to the 2% target. So monetary policy will need to continue to remain restrictive for sufficiently long. In other words, monetary policy will need to have higher interest rates, restrictive, to restrict the economy for sufficiently long until the risks to inflation returning sustainably to the 2% target in the medium term have dissipated further. So if all of a sudden you've got a surprise inflation print, 1.9, 1.8%, hooray! Everyone says the Bank of England can cut rates, the pound falls. And then, euro pound longs could be great. Now, obviously, by the time you watch this course and this lesson, this is not going to be relevant. But the principles are exactly the same. You see, you look at the rate statement, you read it, and you see exactly what they're looking at. Go and read the details. Don't just rely on analysts or second-hand reports. Read it for yourself. And then the other thing is you got this monetary policy summary of the votes. Now let me show you this here. Here is the vote split, right? And I'll show you. So I'm going to get rid of these. This is the vote split going back to 2000. It's going to get to the more recent ones. Remove. Let's just cut those rows, right? Let's delete these. Delete selected rows, right? Now, what you can see here is the members of the Monetary Policy Committee. This was on the website, so you can download this actually on the decision. So there's a little link there, and you can download it. And this tells you what each Monetary Policy Committee member voted. So you can see here, the bank rate, I'll show you how to read it. The bank rate was 4.25%. And look, Bailey said, yes, I agree. The prior reading was 4.25, so that represents a hold. So hold. Look at Dingra. She voted for 4%. Do you see? Now, she's very dovish, but I won't get into that. But that 4%, you see, was voted for a cut. So Dingra voted for a cut. Hold, Green. Hold for Lombardelli. Hold for Mann. She's very hawkish. Hold for Pill. But look, Ramsden and Taylor. So here you can see, look, Taylor voted for a cut. Ramsden voted for a cut. But look at this. In the prior reading, look, he voted for a hold. So straight away you see, Ramsden's turned more bearish. Ramsden favours interest rate cuts. And then you see why. What was the reason? He might say something like, I think inflation is under control. But, we're considering that inflation is moving closer to the 2% target. Then all of a sudden, if you know that, one Monetary Policy Committee member is thinking that, sometimes think, well, are the others shifting? You see how it works? So you can see what the decisions were made. And analysts will write pieces on this. You don't need to go and do all the interpretation yourself. But each of these committee members will have a bias. So Catherine Mann, she is very hawkish, right? And what you're looking for when a hawkish turns dovish. And that's exactly what happened in one of the meetings. You see here, we're at 5%. Do you see how, look, Catherine Mann, 5.25, she wanted a hike. 5.25, Mann wanted a hike. And then, okay, hold. But then if you look, where is it here? Yeah, she was a hike. Yeah, but look at this. 4.50. So there was a cut of 25 basis points, but Catherine Mann wanted a cut of 50 basis points. Wow. Shock, surprise, right? So that's what you're looking for. The other sort of cool things you can see on the Bank of England website, you've got all the interest rate levels since 1694, right? So way back, that was the first interest rate level, 6%. If we were living in 1694, right? That is the interest rate. And you can see all the changes over the years. And interesting, I remember this in the 80s, 70s. Look, interest rate up 13, 11%. Like I remember my family, my dad, mum, hardly able to make the mortgage. They were really squeezed. And finally it started coming down. Very difficult times, late 80s, early 90s. And look, so if you're ever taking out a mortgage, look how high interest rates can go. All right, so just be aware of that. It can be really, really surprising. And then we had the disinflationary period of the sort of 2000s. Look, 0.25, 0.5, 0.75 after the global financial crisis. Huge period of very low interest rates, right? And I will show you, as promised, a picture of the Bank of England. And you can see here, there's a picture of the Bank of England. Now, lovely building, really great sort of Greek architecture. I think that's a Doric pillars at the front. And just to the side of it here, just to the left, there is a Bank of England museum. And it is brilliant. It's a free museum. So if you're ever in London, it's worth going to the Bank of England Museum. It also has things for children. So for young children, like obviously 2 or 3, it's not suitable. But, if your child is like 5, 6, 7, 8 and older, they have some great things in there. And it's very educational. And you also get to hold a gold bar, right? So that's one of the highlights of the Bank of England. You get to hold a gold bar and you'll feel how heavy a solid gold bar is. Okay, folks, that's the Bank of England. Don't forget, the links will be in the accompanying PDF. The Bank of Japan is responsible for setting monetary policy for Japan. It's based in Tokyo, and the board is comprised of a governor, 2 deputy governors, and 6 other members who make up the committee. Now, the Bank of Japan has to work very hard to prevent excessive strength in the yen. The yen is a safe haven currency, and in times of turbulence, geopolitical stress, the yen tends to strengthen. Now, the problem for the Bank of Japan is that Japan has a very strong export market. And as a result, a strong yen makes foreign exports less competitive. So the bank has on occasions entered the market artificially to weaken its currency by selling the yen against the dollar and the euro. Now, this can result in pockets of dollar yen and euro yen appreciation. Now, the central bank wants to achieve price stability and does become concerned when the market becomes too volatile. And probably the key issue facing the Bank of Japan over the years has been its deflationary economy. That might seem hard to understand when you're looking or listening to this during an inflationary period. But if you just take a look here, and I'll just flip over to current interest rates. Now, this is sort of, summer 2025. But you look at the Bank of Japan's interest rate, it's far lower than the other central banks. You can see central banks looking at the implied rates that are coming up 4, 1, nearly 2, 4, and then the Bank of Japan 0.48 implied rate, right? So you can see that compared to other central banks, Japan is reluctant to hike interest rates because of the deflationary forces. That does impact the Japanese economy, and there are times when you've had in the past, strong quantitative easing processes from the Bank of Japan, try to stimulate growth, try to stimulate moves. That has weakened the yen significantly. You can see here in 2013 when the Bank of Japan started quantitative easing, and it just led to a one-way street for weaker yen. Now, in terms of actual interest rate decisions from the Bank of Japan, here is their website. The monetary policy link is just found here, and you have monetary policy meetings, and you have the monetary policy minutes. Now, the meetings themselves, they released at a funny time for Europe. Now they come out. It's a bit of a rolling start from about 3:30 a.m. UK time when the notes come out, and for a long time, the main issue with Japan has been trying to fight that deflationary forces, and with such small moves in interest rates, the central bank decision from the Bank of Japan hasn't tended to be that significant. Sometimes it's significant in terms of what their QE program is, or whether they're expanding it, constricting it. That can move markets, but it's quite a tricky one to trade. But nevertheless, this is where you find the information, and the same thing as always, you're looking at the key kind of data points. These are summary of opinions. Let you know how the Bank of Japan is thinking about the current financial situation. And again, you'll see references to CPI, right? And what you're looking at there, see, although the CPI has been higher than expected, the pass of higher wages to service prices seems to have plateaued. So all of a sudden, okay, you can see that high wages are going to be important for the Bank of Japan's understanding of inflation pass-through. And there's a sort of well-known phenomena that, you know, higher wages lead to higher prices lead to even higher wages lead to even higher prices. It's called the wage price spiral. So straight away, that the Bank of Japan is sort of saying that although higher is higher than expected, they're not seeing it pass through into wages. Again, a little bit of a trickier one to trade. So you're mainly looking at their quantitative easing program for the Bank of Japan. Nevertheless, do look at the PDF. You'll see the links for the decision and the link for the Bank of Japan website in the accompanying PDF notes. The Reserve Bank of Australia, the RBA, consists of a governor, currently Michelle Bullock, a deputy governor, and 6 independent members appointed by the government. They meet 11 times a year, meeting on the first Tuesday of every month, apart from in January. And the Reserve Bank Board's duty is to ensure that the bank's monetary and banking policy is used to help the Australian population. They are meant to help the government with the stability of the currency of Australia, maintaining full employment in Australia, and the economic prosperity and welfare of the people of Australia. Now, in practice, the Reserve Bank of Australia concentrates on the first objective, that's to control inflation through monetary policy. The current objective, in line with many central banks, is a policy of inflation targeted at maintaining an annual inflation rate between 2 to 3% on average over the cycle. So if we have a look at the Reserve Bank of Australia's website, you can see it's here. And again, this is one of the easier central banks to navigate. If you're looking for the monetary policy aspect, which is really what we're most interested in, you just click onto the monetary policy decisions. I would recommend, especially if you're learning, reading some of these pieces here, because you will get a greater understanding of monetary policy and what it's meant to do. You can see here 2025, 2024, 2025, and then you've got the monetary policy decisions for this year. Now, once again, I'll demonstrate to you good practice. And by doing this, you'll see not only how to access the monetary policy decisions on the central bank websites, but then how easy it is to see which economic data points are going to be moving markets. And it's simply by, focusing on what the Reserve Bank of Australia is focusing on. And if you think about it, it makes sense, doesn't it? If we want to make a decision, who better to look at who better to see what factors are most important than the actual decision makers, and that's exactly what they tell us. So this was a very interesting decision, one that's sort of recently covered as I've been making this course, so I can give you a good bit of insight into this. Now, what was expected for this decision was an interest rate cut. Now, short-term interest rate markets were expecting an interest rate cut, and surveyed analysts were expecting an interest rate cut. So remember that principle. What's the base case? What's the surprise? Does it change the bigger picture? So what was the base case? Everyone was expecting an interest rate cut, right? So what will be a surprise? It will be a surprise if they cut by more than people were expecting, or if they don't cut at all. Look at this. At its meeting today, the board decided to leave the cash rate unchanged at 3.85%. So here's a good little quiz for you. If the markets are expecting the Reserve Bank of Australia to cut interest rates, and then they don't, what should happen to the Australian dollar? Right? The Australian dollar should rise. Why? Because it's a surprise. Interest rates are higher for longer. Higher interest rates support the domestic currency. So you'd expect the Australian dollar to gain. And of course, this would have been a textbook. This was something that I was recommending to clients looking to trade the Aussie yen long on this decision. And if you look here at the index for the Australian dollar, this is just the Australian dollar index across all currencies. And look here, do you see the way the Aussie dollar? It just rose out of the event, right? Pull back, rising. So it's rising from 1 2, 3 days really. The Australian dollar rising, and then look at these nice kind of like hammer reversal bar higher, good kind of like dip buying opportunities. You can see that this trend line respected, okay, broken and then broken up above, and on we go. Could even have the trend line here, just these 2 places. You can just see, okay, great kind of opportunities, even breakout plays. Across the top here, there's nearly a flag pattern here as well, isn't there? It's not quite a flag, it's not a textbook flag pattern, but it's not bad. You can see there, that's a kind of flag pattern. Let's just get it there. Maybe more a pennant. It's not great, but you get the idea here. This was a surprise because they said they were unchanged, and then look, why did they leave it unchanged? And they tell you, while the recently monthly CPI indicator suggests that June quarter is likely to be broadly in line with the forecast, that they were at the margin slightly stronger than expected. So they've told you, right? Because inflation was slightly stronger than expected, they thought they could wait for a little bit more information to confirm that inflation remains on track to reach 2.5%. So they're telling you they're a little bit nervous, right? And then look at the end of the decision. They tell you straight away, right, the board judged that it could wait for a little more information to confirm that inflation remains on track. So what do you think the significance will be of a inflation print that surprises well below market's expectations? Then interest rate cuts will be priced in. Markets think, oh, the Reserve Bank of Australia can cut interest rates because look, inflation is falling more than people were expecting. Everyone's surprised. So then you see the Aussie dollar weaken. And then what happens if the inflation comes in much higher than markets are expecting? Then everyone goes, oh, the Bank of Australia were right to hold interest rates. Then maybe interest rates will stay higher for even longer and the Australian dollar gains. You see, straight away, you are zoned in to the important factor. Now, don't look, when the time you watch this video, this is going to be irrelevant. Inflation may not be relevant, but what I'm giving you is the tools how to work this out. So don't take from this, oh, inflation is always relevant for the Reserve Bank of Australia. They tell you what they're focusing on. Sometimes it might be like the labour market. It might be GDP that's particularly focused, or it might be some other indicator that isn't really that important, but all of a sudden it becomes important in a certain time in a certain place. Remember, context is everything. Context is king, essentially. And that's what helps you. So there you see the Reserve Bank of Australia, right? That's the monetary policy website. Very easy to navigate website, unlike some others. Once again, links to the website and the monetary policy resource section in the accompanying PDF.